Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our commodity technical analysis update. As we go along, I'll give you my financial opinion. If you guys need any help with anything, definitely check out the website, finding-value.com. Become a platinum member. We do have a question and answer session occurring tomorrow at 7 a.m. I can answer all of your guys' questions within my opinion. I'm not an advisor, so I can't give you advice or anything like that, but I can show you what the charts look like, give you my opinion on it, and we can obviously go from there. So if that interests you, definitely subscribe and sign up. So let's dive in to what we've got today. We're going to go straight to the dollar and work our way through yields and so forth. So we've got the dollar here. I look at it from a charting perspective because that's kind of how I see the world, is data through charts. And I still think this looks positive for a higher dollar. The reason I say that is when you see this type of formation where you've got large up candlesticks like this, there's no real large selling pressure anywhere through here. So usually, statistically, what I've seen in the past is that this is going to resolve itself higher. We're just stuck on this long-term resistance line right here, that white line going up and across. So that still looks good for a potential move higher in the DXY. The DXY is a relative strength indicator. It just means that the currency is stronger relative to another basket of currencies. I think this will continue for some while. I don't know the exact turning point, but when that turning point happens, what you're going to see is you're going to see a lot of strength in precious metals and commodities. I don't know if we're there yet where we get that gigantic tailwind from the DXY, because this still looks strong. And I'm waiting. Believe me, guys, I'm waiting for this DXY to turn. This did the same thing in the mid-2000s. The mid-2000s, it went up all the way to about 02 or so, and then it really turned and came lower all the way till 08. That was a big tailwind behind a lot of stuff. The 10-year yield was a little bit lower to flat, basically flat, slightly lower. And looking at bond prices, the 20-year bond price is lower, and we still have a downward move in bond prices. Yields higher, prices lower. They're inversely correlated. Now, the TYX was up 1.12%. And we've got this nice little kind of pattern here that looks like it's trying to break. Whenever I see the TYX outperform the TNX, when the 30-year yield goes up in relationship to the 10-year yield, think of a curve that is more normalizing. Think of it that way. That's when we see gold start to take off. And this is that ratio here. And what I did is, we've got an increasing movement there, declining movement there, increasing there, declining there. We've had gold at August, which was this peak, basically peter out, and we've come all the way down to a very low point in the ratio. And if I were to zoom in on this, we're getting a nice bounce at this support level. Support level, support level, support level. And when this ratio moves to the upside, when it goes up, we've seen favorable movements in precious metals. So precious metals really took off from 2018 all the way to August of 2020, which is the peak here. And if we were to kind of zoom in, I'll go through the commodities first real quick, just because they're here. The CRB index was down a little bit today. I do think we could go a hair lower here because it's mainly oil. But when you look at gold, gold was up today when that yield curve kind of normalizes between those two. Is this a bottom? I'm definitely not going to claim that. I don't know for sure, but it does look favorable for the 30-year yield to outperform the 10-year yield, and the relationship of where that is historically in terms of that ratio. So I am looking at this from a more favorable standpoint. I understand that we've broken out to the downside here below this support level, but that doesn't mean that we're breaking out to the downside and that we're going to stay down here the rest of the month. We want to see this come back up and start to move We call it the slingshot cheetah if it were a true slingshot type pattern where it fakes everyone out, gets everybody to stop loss out of this thing, and then reverses and rolls higher. I'm not claiming that this is going to be that type of scenario yet, but we do have positive signs in the yield, in terms of the ratio of the yields, showing us that we could be putting in a bottom, which then could be putting in a bottom of this gold price. I say could because we're only playing with statistical probabilities. Nothing is 100% sure. Silver is also looking a lot stronger here, which is more evidence stacked up that this could go higher. I do think that silver here looks really good, and I don't see that selling pressure, at least in the candlestick formations, like we're just going to drop off a cliff, go lower. I mean, it could. You can't rule out anything, but this still looks good for me to go higher. Platinum is also putting in a pretty good effort for a move higher. The sellers came in today. They tried pushing it lower, but the buyers came in and pushed it back up and gave a nice little hammer candlestick. So I'm still remaining positive on the precious metals sector, and I still think it looks pretty good. What I'm really waiting for is that dollar to roll over, and then I think these guys will have the wind at its back. We're looking for the dollar to roll over, and I don't know if that's necessarily ready yet. That's what I'm really focusing on. XAU to gold ratio, it's still down here, bouncing all around. It's confused on where it's going to go. And what this is the gold and silver miners in relationship to gold. We have not broken the big kahuna breakout line. We want to break that. If we can break that and get on top of that, that's paradise, guys. That is where we want to be. And that is where the money will start flowing into your accounts if you are a gold and silver miner holder. At this time, it's been nothing but pain all the way since 1996 for the most part. We had a little bit of a relief rally, and we've just kept going down, 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 down. I think on this break and a kind of a paradigm shift, we could see a big move out of the gold and silver miners at that time. Looking at GDX, kind of getting in there. Not a bad day today, 1.1%. Nothing to be too mad about or worried about. But we have been kind of just, I'll say, meandering a little bit lower with the price of gold and silver. So it's looking a little bit better. Again, though, I'd like to see more buying pressure. We are in an area of very strong support underneath us. So I do think risk-reward wise, it doesn't look bad down here if you've got the cojones to kind of wait it out. Looking at SILJ is also at another support level, much like GDX. There's our support level. We're right on top of it. And we had a flat day today. Is there some sort of kind of downward trend line channel that we've got? Yeah, we have it going on there. But we're right on support there. That's what we want to hold. Looking at crude oil was basically flat. I am an ultra bull on crude oil, medium long term. The short term, over the next few months, is what I mean by short term. I still think we could go lower. And I know they want this to go lower. They want it to go lower very badly. They're dumping SPR, Strategic Petroleum Reserve releases. They want this to go lower. What I am doing is I'm looking for a buying opportunity in crude oil when this thing bottoms out. And that could take a couple months. So I'm watching it. I'm a little bit more careful in it right now. I have very large holdings in crude oil. I'm not selling anything, but I'm kind of just waiting on my purchases to buy more. Natural gas, getting a little bit more selling pressure here. We do have a little bit more support kind of underneath us here. But again, we're coming up into fall. It's in between seasons. You've heard me say this before, that we could see this kind of cool off. If you draw a line across here, you do kind of see this head, shoulder, head, shoulder, where we could maybe come back to this level. I would love it at this level down there. Give it to me, please. That's where I want to see us to go. If we can get down there, I would be in heaven, because I really do like natural gas from a medium to long term. What that would do is it would put us at the bottom of this expanding wedge. Somewhere in that range down there would be fantastic, just like this buying opportunity there. I took full advantage of it in some of the companies in this area, and they've gone up dramatically from that time. So I'm looking again. The companies, this is the ETF XOP. We're getting some selling pressure, but again, if we were going to pull back to this level down here, the sellers would be selling this off and closing it. The problem is we've got people coming in and buying it. That's why that wick's at the bottom there. So we're getting this wick at the bottom, and buyers are coming in. If you were to look at it from a daily perspective, and we were to draw, this is what I mean by it. This is on a very short-term basis. You can see that breakout of this downtrend line. That's what the wick is at the bottom. The wick is a reversal candlestick. It's basically a broken downtrend where we could potentially go higher. So this is the downtrend line break and the move higher on the short term. Again, remember, short term, anything can go in the short term. But we continue to see buying pressure in this, even though we're seeing weakness in the underlying commodity. I see that as ultra bullish. There's probably a bunch of people out there that have similar viewpoints to myself. We think that oil and natural gas have a supply problem. The destruction of demand through interest rates will not solve that supply problem. The supply problem will be solved with supply and investment increases, supply increases and investment increases. So that's kind of my take on it. It doesn't mean that we can't go a little bit lower. I'm hoping that we can for my own, I'll say, selfish wanting to buy more in a lot of these companies and get even greater exposure. OIH, this is our energy service companies. Again, I still like it in this area. It's been ping-ponging back and forth all over the place here. And I think there's some good opportunity there. Why? Because if a supply problem can't be solved with demand destruction in the quantities of demand destruction that I think we would have to go into a very, very big recession, depression. And that very well could happen. I'm not ruling that out. But I think we're going to have to solve it from a supply aspect. And I do think that more oil and natural gas is going to have to be drilled. And that right now we're just not, it's not in it's not being looked at very positively at this time in energy service companies, but it will be in the future is my take on it. Looking at uranium, we have had a little bit of a pullback in uranium futures pricing, but this is very common. We get a breakout, a retest, and then a move higher. I even drew it on some of the charts. It's almost as like I just naturally think that you're going to get a retest. We're getting that retest move on a lot of the companies and in uranium. It doesn't mean that we should be changing our viewpoint from a bullish perspective to a bearish perspective. We're still above the broken downtrend. So I'm still very much bullish on this. We can see in the Sprott Physical Uranium Trust that this support line is holding. So we broke out, we did a return move, and now we are going to try to go after the next resistance level, which is this guy up here at 1850. And we want to close above 1850. That's going to be a win if we can get up here and close anywhere up there. And again, we could break out and we could come back and do a retest move. It's basically a break, shake, and bake move, like where you break out, then they shake you out, and then we break higher. So it's a shake. That's a break, shake, and break movement. And looking at URNM, URNM is also coming back to that strong line that I drew in here earlier. I said if we get above that line, that's good. We got above that line, but it's tiring to stay up here, especially if the overall markets are heaving. You know, they're not doing too well. So we've come on back. We're right at that support level, and someone like me, I would be looking. I would be looking around the sector for deals. That's me. Looking at TAN, TAN is still looking good. I think this still looks fantastic. We're still above the broken downtrend line. Usually what you get is you get a tall guy, which is that guy there, and then you get small down movements if there's not many sellers, which there isn't. You get kind of a pullback, and then you get another resurgence of a stair-stepping pattern higher with buyers coming in. So I still think that solar looks quite strong at this moment. Looking at COPX, this is our copper ETF. We've got strong support in this vicinity down here. And we're right on top of it. That's usually where I like to look for potential buy points, is sitting on this support line. And we are going back and forth, and we had a small down day today. So we're just moving sideways. Copper is much more exposed to the weakness in the overall economy right now. So we've got a lot of weakness in the overall economy, and copper is it's gonna let you know that there's weakness out there. But if you look at the price of copper, we'll go and look at that a little bit later. That was up today. CRB to S&P 500, it was basically flat in terms of that ratio. I like looking at this ratio. And the CRB index in relationship still looks very strong. We've got the broken down, the broken wedge pattern to the upside. I still think this will work its way higher. If the S&P 500 were to crash, I think commodities will crash less. That's the type of expectation that I have for commodities. It doesn't mean every single day, but it means in general. REMX, the rare earth metals, coming on back a little bit for this ETF. I still think it looks absolutely fine. We're still above this big long-term support. We had a little bit of basically moving sideways, grindage through here. We're getting a little bit of grindage through there. And then eventually we'll make it and break it. So we break it, we fake everybody out, and then we take off. We're still in that process of doing that. Lithium, down a little bit today. I still think it looks great. We're right on top of that support level. We're not broken to the downside yet, so I have to remain bullish on it. It's kind of the rule. The S&P 500, we're playing with this support line here. It's hanging on by a thread, in my opinion. We've got a bullish, more of a bullish hammer candlestick, but it's sitting below this resistance line. So we could come up, and we need to break through it for it to be kind of out of, in the clear. If this thing hits it and then rolls back over, we could see lower prices in the S&P 500. I'm inclined to think that the S&P 500 is going lower. The U.S. NASDAQ or U.S. Composite Index is doing the same thing. We were down today, positive momentum slightly up. I think we might hit our head on this or come up and then come back lower. The reasoning is we've got strong headwinds with the dollar, strong headwinds with increasing interest rates, and we've got a lot of problems in energy. And energy is the input for all these companies. And a lot of the inputs are also in supply problems, supply crisis problem, we'll call it. And I just don't think they're going to make more money or be very resilient in this type of market condition. So I think we're going to head lower with the headwinds of the 10-year yield and dollar. EEM, again, the dollar's been strong. This guy's been holding on by a thread. And we need a weaker dollar for this to turn higher. That is just what we need. If we don't get a weaker dollar, I do think that this is going to go lower. The one thing that, looking at this, we've got a massive pattern, consolidation pattern. We broke out, and then that strengthening dollar is just torn us lower, 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 lower. So it's based off the dollar here, in my opinion. XHB is the Home Builders Index. We're right at support. We'll see what this is. What I'm looking for is the housing starts numbers to be released. I believe they're released September 20th. So I really want to see what that data shows us. If we see a lot of weakening in the housing starts still, and we get a couple of weakening, we'll call it months below the average, we may have to start looking at stockpiling a little bit more cash, because that's usually a leading indicator of weakness in the markets. It's undeniably that the markets are weakening. And it highly depends on what they do with interest rates. If they continue to increase interest rates and the housing starts continue to go lower, we may have to be looking at raising cash levels. But right now, that's not on the board. It's not up yet. We have to continue to see what the data is showing us. Looking at lumber, Lumber's heading a little bit lower. We're still in this big pattern. I'm not too concerned at this moment. We are still at very high levels. I know it doesn't seem like that, but historically, we are still above this gigantic breakout of $380. This is historically, this whole area over here is historically incredibly expensive for lumber. Looking at cocoa futures are still looking good from a short-term perspective. I still like it. This squeezing up, it's going to take some time. Wheat still looks really good in my opinion. We're still above the broken out resistance line now, support. We could do something like that or just move higher. Soybeans still looks good. We've got a controlled, nice little teeny sell-off. Not too many sellers pushing this thing lower. That still looks good to go higher. Same with corn. I still think this will work its way higher eventually, and that the momentum is higher. Surprisingly, I say this, surprisingly, copper is really strong right now. That's a bullish engulfing. That looks like it wants to go higher in the short term. But we still have to break out and close above 375 or so to get this into an uptrend, a new uptrend. The first step's to break it. So step one's to break the downtrend line. We've done that. Step two is to create a high. There's your high, or sorry, not step two is to create a higher low. And then step three is to break through that high that you created. So that is a new uptrend if we can close above 375 on copper. And that would surprise a lot of people. A lot of people right now are very bearish. Usually that is bullish if everyone's bearish, because if they're all positioned in cash, it means there's a lot of cash sitting on the sidelines. As weird as that is. So we've got a very difficult market to navigate through here. It is very difficult. We've got MOO. MOO is the VanEck Agribusiness ETF. It's right at support, maybe a hair below it. We'll see if that holds and what that does. We've got aluminum also right at support. It's hanging out right on the support line. And then we've got the Baltic Dry Index heading higher, that's also a good sign for the overall markets and the bullishness of kind of the economy. Seeing stronger shipping prices is always a good thing. So we're getting some mixed signals here. Oil is weaker. I know they want to push it lower. Is that an artificial price based off of inventory releases? I'm inclined to say yes, but we'll see what happens with the demand. We're coming into weakness, usually seasonal weakness in demand for oil and natural gas. We could see a pullback in the fall. We'll see where that goes in the winter. I think higher. That's my opinion on it. We see copper looking a little bit better, but it's mainly just moving sideways. We need to see that break to the upside. I would be much more confident seeing copper in an uptrend than it is just moving sideways. Will I think we get an uptrend? We've broken the downtrend. That's the step number one. And we'll see what happens. I don't really have a good clue on which way this is going to go. I think there's a lot of things that are just difficult to read at this time. We've got lots of numbers and data that we're really depending on over this next couple of months. If we see housing starts continue to decline, that's something I don't want to see. That is something that will make me convert some of my stuff or hold a larger cash balance, because I don't want to see the housing market fall out. What this is kind of telling me is that the housing market may not necessarily be the driver of this inflation. It could very much be stimulus driven, and if it's all stimulus driven, then we might have other deeper problems behind it, and it might be debt driven as well, where they created all this money to kind of alleviate maybe some problems with debt, kind of gave this money out so people could afford payments of like mortgage payments and debt payments and all that stuff, the stimulus money that is. And it's just a difficult market to navigate at this time. It really is. It's getting harder and harder because there's so many things going on. There's something about a rail strike that's out there. Rail as in like trains, moving things around. There could be a strike there. There's a lot of stuff going on in the markets right now with a radical the steepness of the increase of this the federal funds rate is astronomically fast. So they've really pumped this interest rate from a very low level very quickly higher. I would not have guessed that interest rates or mortgage rates would be at the level they're at this time. I was thinking a much slower increase. That is weighing down on these markets. Definitely it is. And it's going to slow things down. But their underlying structural market conditions underneath it are still bullish for commodities. They're still bullish for, I even think, housing. But the interest rates and the rate that they've increased all this is definitely slowing it down. And it could pull back quite a bit. I wouldn't have guessed this. Usually, historically, rates have gone up much slower than what we've gotten. But we've also never had stimulus like this. Usually, it's driven by the housing market and demographics. I don't know if this is necessarily driven by housing and the demographics. That stimulus money that came into the system was basically a shock to the system. And I think that's what's shocking interest rates to the upside. So if you guys need more help or have questions, definitely sign up to the membership, the Platinum membership. We do have our 7 a.m. Mountain Standard Time Platinum question and answer session. And if you guys like this and you start, you like the videos and whatnot, give me a thumbs up, subscribe to the channel, and we'll catch you next time. This is Finding Value.